Well, good morning, traders. Happy post-Thanksgiving holiday. Hope everybody's that lives in the United States. I hope you all had plenty to eat and plenty to drink and plenty of great times with your family. For those of you guys that weren't celebrating the Thanksgiving holiday, I hope you just enjoyed this like quiet time in the markets. It has been fairly quiet in the markets. We did have some data come out of Europe. And I don't know which one of my team members here. It looks like Ryan's here. Ryan, how are you?
Hey, Blake, how you doing, mate?
Good, man. Good. I was Ryan. You asked me how my Thanksgiving went, and what was my answer?
You slept through most of it.
I took 3 naps yesterday, so that's what happens when you do a little bit of day wine drinking. You eat.
Serves you right.
Yep. Have a glass of wine, fall asleep, get up, eat some more, have a glass of wine, fall asleep. Yeah, that was pretty much my day. Anyway, but it looked like we had some European data come out over Thanksgiving. And the UK data, the services PMIs came in back over 50. That's good.
Yeah, it's all coming up roses for the pound at the moment.
Yeah, I mean, okay, so we got this data that looks, fairly good for the sterling. I mean, are we buying it?
I wouldn't be buying it up the top. No. If you get a decent dip, you might want to think about it. I was noting on the flow show, it just this week there's a bit more positivity about the quid. We came through the autumn statement. That's been seen largely positive for businesses and the like. Now we've had data better, particularly for services. So all of a sudden the sun's shining here rather than storm clouds.
Yeah. Oh, I mean, you've been kind of chatting about it and telling us that things don't seem as bad as people have anticipated. So now the as far as the pound goes, where we're at, I mean, I think we're up at some pretty key resistance. You could say this is a 50% retracement, previous support. We're knocking our head right into it. I don't know if I'd necessarily be on the long side, but I don't know if I'd want to be short either, right?
No, exactly. We got a big level coming into this 126. If we hit it today in sort of thin liquidity, it may be resistant enough if anyone wants to try a little scalp short. But you want to either see a half decent dip, maybe down to 124s to try and ride along. But I won't be trying to buy up here, definitely.
Yeah. Well, what do you say to the people that are short right now?
Short, you probably got a bit of a last line in the sand at 126. If we break through that, we're probably 127 not long after. So if you are short up here, as always, know where your pain point is, and I think that's up at that fib and the 126 level.
Right. Okay. Well, sounds good. First of all, what I should have done is, look at the comments and say, good morning, Alexander. For those of you that are wondering where Coach is at, he's spending the holiday weekend, the long weekend with his wife's family. So I think they had to drive a little bit of a distance to get there. So that's where he's at. He didn't want to, we want him to enjoy the 4-day week. So 4-day weekend. So he's out and about. Hopefully he is feeling better, Simon. I agree. Forex Gal says, good morning to you. Good morning to you, Forex Gal. And Patrick says, thanks for running the ship, Blake. Hey, we got Blake at the helm. It's fine. Everybody's good. I had my son driving us yesterday because I was drinking some wine, and that's scary. It's scary, Ryan. I'm just telling you. I know your boys aren't quite at the driving age, but when it happens, it happens. Good morning, Mike. How you doing? Hope everybody, like I said, had a happy holiday. Let's take a real quick run through a couple other things. We got Grega here, and we also have Stelios coming in today, and we're gonna. But I want to take a look at a couple of other things before I bring in those two gentlemen. We had, as far as economic data goes, just the other day, Sweden. They actually did not raise rates. They did a hawkish hold, didn't they, Ryan? The rich bank.
No. Yeah, Riksbank. Yeah, they did. I mean, they were on pause, but they kept a hike on the table, saying that they likely might hike in January or early part of the year. So it's the same as every other central bank. They're giving their we're on pause, but the door's open still, and we're going to keep rates high for longer, and blah 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 blah. So it's pretty much following all the rest of the central banks.
Right, and but there was some anticipation that they might actually raise rates, so they didn't, and we what we saw was a little bit of a spike higher. But like every other central bank, as you're pointing out, everybody's just kind of standing by and seeing if inflation is going to be wrangled or not, right?
Yeah, exactly. And
Yeah,
then you got Turkey. They hiked by 500 basis points instead of 250 expected. So
I can see that's
those
doing a
guys.
lot for the lira.
Yeah, absolutely.
You know, Steve. Even though Steve, he can't. Somebody had asked where's Stelios and Steve. Stelios is going to make an appearance right now or here in a second. Stelios, you can make an appearance right now if you want. But Steve is doing the broadcasting, so he can't speak at the same time based on how his setup is right now. Stelios, how are you?
Hello, I'm very good. We don't celebrate Thanksgiving, but I did have a lot to eat and to drink yesterday. So does that count?
That does count. That does count. I mean, you know, you're like wafer thin, so you can do that and get away with it. For the rest of us, not so much.
Cool.
You know, so is this the time to buy the lira? I mean, Ryan thinks it is.
I don't trade the lira.
Joking, Ryan.
I mean, if you, as Steve has said so many times, you put a gun to my head, you buy the this pair, you buy it to go higher, you know, all the time. Yes, there may be pullbacks, but really, this is going higher and higher and higher and higher. But I don't trade the lira. Sorry.
I know. I'm just
what
kidding.
I do want to say though is you mentioned the pound, you mentioned the US and everything. Interestingly, I think the pair, if you are bullish the pound, I think the pair still to do is the euro pound. It's at least it's pretty clear which way or where you are wrong, basically. So remember, I've been saying for ages and ages below 87.2, this is bearish. Well, we got above. We're now, you know, I wrote this on the chat room a couple of days ago. We're now in a range, or we were in a range 87 to 87.5. It's trying to figure out what it wants to do. We are actually at the 250 DMA here, within a few pips. So my opinion, if you want to take a view on the pound, I think euro pound is a nice one to be short of. And remember, yesterday we had something which was, in my opinion, quite big, and people kind of brushed it aside. And this was Germany saying that they're going to they have this debt break, which is effectively a debt ceiling, right? And they're going to abolish it. So they're going to be able to borrow and borrow and borrow.
Yeah, look at Germany turning all
into Greece.
Conservative. They're turning Greek. Holy cow.
So you know, if you have you know, this theoretically is not good for the euro, and combine that with better than expected UK data. I don't want to say that the UK is, you know, is doing great, of course not, but and on a comparative basis, I think this is not a bad place to be if you want to be along the pound, to be short the euro pound. And you know where you're wrong, 87.5. You know, that's it. Something's happened, you know, something changed, and this is going way higher. But and I do know it's 60 odd pips from here, so it's not a small amount. But you know, size accordingly, you can trade this. But
what do you think? What do you think about that, Ryan? I mean, Stelios just told you, who's living in the UK, things aren't that bad right there. I mean, you know, that's like it's like me telling people in Afghanistan their life is okay.
Yeah, right? Well, exactly. It's never as bad as our press make out. That's the first thing I always say about the UK. I don't think we're out of the woods. Like a lot of countries, we've yet to see a real bite from rate hikes. So I think there's still a big risk. It's trading at the moment. You roll with the punches. At the moment, we've had a positive mini budget. We've had some positive data. I mean, let's not beat around the bush. It just about crept into expansion. You know, if it was at 55 in services, then that's a different kettle of fish. So yeah, we're not out the woods here. The pound's enjoying a moment where the sun's shining. I'm still happy to be long euro pound. because I'm long off the bottom, so I've got plenty of margin to play with. But yeah, we'll keep going. If this data continues and it becomes a trend, then I'll maybe have to revise my my short pound position.
All
Plus,
right.
Sorry to interrupt. The
go
other
ahead,
thing,
go ahead.
a couple of days ago, the minimum wage was hiked, but what was it? Was it 10% in the UK?
Yeah, yeah.
So that's
I think just
that
over.
you're going to see some. I'm not saying that this is driving the economy. I mean, it's the minimum wage, but it's still something which will be inflationary. So I don't know. Right here, right now, if you ask me, this is a pair I would love to short, but you have to get past this trend line that Blake has there, and also the DMAs, which are right where we are. So it's kind of a decision point here.
I love the fact that we had a little bit of a false breakout technically, and I just drew that circle there.
Yes.
When we broke above the 50% retracement, you can see that's right here at the top of this zone, right? It's the 50% retracement. I was looking at that going, and I didn't trade it. But when it started to break out, I'm like, okay, here we go. We're probably going to push up towards the 88 pence, excuse me, level. And then we quickly reversed. And, so there's probably some traders trapped on the long side somewhere around here. So, I mean, that you got that going for you. If you are looking to play it to the short side, Stelios, the flip side is, as you pointed out, and there's still some longs in there, especially Ryan. You're long down here. You're at the 50 DMA, and you can see it right there, the 50 DMA and the 200 DMA. So there is a lot of support here. Now I'm gonna move along a little bit because I know we have Grega here, but before we pass things over to Grega and kind of get an Elliott Wave point of view of the markets, because I am interested to see where he sees the S&P. And so Grega, make sure you got your chart standing by where he sees the S&P, especially that we've made this really nice rally into rear end into year end, maybe into some shorts' rear end. I do want to also take a look at precious metals. So let's take a quick look at gold, because gold, we're struggling as we get here towards 2010. And here's my big fear. And I'm going to say this, and then I'd love to have you guys' feedback. And I was talking with Chris Weston earlier this week about it, because he was, pretty bullish gold early this week. And I'm like, I can't do it while silver is not breaking out. Not because gold and silver are independent, trading, asset classes, but they are both precious metals. And it's really kind of rare to see them at least both go up together. Yes, gold might go up 4% and silver go up 2%, or, silver be up 5% and gold will only be up 1.2%, but they're going up together. And when you have gold trying to break to, 2010, and silver can't break the 618 retracement, I think it's big triangle resistance. I'm a little nervous here. What are you guys' thoughts on, well, first of all, silver, 2420 is pretty big level for me, but as far as gold goes, Stelios, let's start with you. What's going on here, and should we be buying it, and are we going to test the all-time highs or this triple top up here?
Well, should we be buying it up here? That's the question, because we're coming up to very big resistance, both in gold and silver and platinum for that matter.
Yeah.
So should you be buying this here? I would say no, because the problem is, as you get to that level, it becomes a very good risk reward short. But having said that, I think we're going higher. I think it's going to break eventually. Will it break on this occasion? Gold taking out new all-time highs? Maybe, but maybe not. I don't know. I'd rather buy this after the break. I'm still long that piece of silver, the last one I have, which is from 2320. It's been going nowhere for the past few weeks. I still like metals to the upside, especially given that I think the Fed is done. I think the ECB is done. I think the UK is done. We are starting to get to the point where the market, yes, everybody, well, not everybody, but people are saying in general they are done. But once it gets confirmed by the central banks, then I think that's going to bring some relief to the market, and we're going to see probably risk assets and metals rallying a bit further. So for now, would I buy here at the 1995 gold? No, it's too close to this resistance now. The risk reward isn't that great, but I do think that this is going to break out eventually. So I'll be looking for a breakout to buy that. Same with silver, 24.20. It's about this. There's a trend line there. There's another one at 20, just above 25. There's a big area here that silver needs to punch through. And I think that if gold does get to new all-time highs, silver's going to fly, absolutely fly.
Okay, well, let me Ryan. I want to hear your thoughts here before we bring in Grega. But isn't this like a little bit of a rates trade? I mean, you got like the 10-year, and let me just show you guys. The 10-year struggling at the previous support, 618 retracement. Looks like an inverted head and shoulder pattern, but it's complex. So it just was running up against this diagonal trend line, and I couldn't get bullish until we got above that. But now we're looking like we're turning a little, and you got yields starting to move up. I mean, if yields are starting to move up from this breakout point, you can see it right here, right over here. Can gold really stage a breakout? I mean, if it becomes more of a rates trade, what are your thoughts here, Ryan?
Yeah, well, it's been shifting sands, hasn't it? I mean, we had the big rally on the Middle East stuff, but it's held up there. So other influences are taking over. But I agree with Stel. We are up against decent support. I was actually short this up to 2007 and 1998, just a small bit, and I let it go because I just didn't like the price action. And it's still not pulling back. So I think it's setting up for a move higher. Just purely on the technicals. If it has to fail, it has to fail through 1985, 86 again. That on-off line that you've got there, that purple line. Do that, then you've got the intermediate 60s, and then you got that big 30 level, which was the level I was looking at last time as support when we came down from those highs. So there's places if it pulls back where if you want to get long, you can have a go. But otherwise, I'm getting an inkling to maybe stick a little buy stop in above, somewhere through 2011, 2012, something like that. Because I think if it goes, then it's going to run pretty fast, probably 20s in a blink, and see what it does from there.
Yeah, I got to say, it's this pullback to the 38% retracement. You can see it right here. I mean, that really keeps the bulls in charge, at least for right now, and it keeps the risk tilted towards a breakout above the highs here. So I mean, I've got to imagine that's how the market's looking at it right now, at least technically. Well, I'd love to sit here and talk. We had some comments about platinum, excuse me, and how does platinum and palladium look. We can go into that in a little bit, but I do want to. And Mike asked about the Aussie dollar. But I want to bring Grega in and hear Grega's.
Hey man,
how you doing? I mean, I know you weren't.
Well.
What's
not
that?
That good? Not that good like you in the US, who have Thanksgiving holidays. Most of the traders, I assume, are also away today, not only tomorrow, but yesterday.
Yeah, I mean, I'm. This is the time of the year that I get to rub it in a little bit with you guys. And here, I'll just show you. This is So I was on a golf course the other day, and it was absolutely awesome. And I was playing with some pretty damn good golfers. One of them used to play baseball professionally, so natural athlete. I'm shooting against scratch golfers, which is not good. But the weather was perfect, and in where I live, and I know you guys are not getting that right now. So what's up? What are you thinking about the markets right now, Grega?
Well, I think that if we try to link everything with US yields, I just think that the US yields have topped out. And I think that after maybe some short-term rally, and when we get a new sell-out, dollar will just continue lower, and this will impact all of the other markets. So I think I'm bearish the US dollar. I just think that this consolidation now for Thanksgiving and these holidays could give us maybe a better chance, better levels for short next week. But overall, I just think that we have the major turn in cycles here.
Okay. All right. Well, do you want to take the charts and kind of give us a view of how you feel about the S&P? And I mean, we can go through, or we could go through our charts. Just remember, Grega does all the Elliott Wave updates, and since we launched ForexAnalytix, really, and so you can catch his analysis right here in the ForexAnalytix platform. But Greg, I'll let you take it live, and you can show us what you got.
Yeah. Okay. How many minutes I have? 10?
Yeah, let's say about 8, so we can set up for the Canadian data.
Okay, good. So as I said, everything is linked to the US yields. Now on the US yields, we have 5 waves up. I think that the top is in, because on a smaller time frame, you will see that there is the 5-wave decline. And these impulses are the most important. Whenever we have 5 waves down from a new highs or from a new lows, it means that the trend is changing. So I think that we are topping out here. And if that's the case, then US yields will continue to the downside after this rally. So maybe some short-term support is now in place here. And I think that if we get some bounce, as I said earlier, I think this could provide us some better levels for dollar shorts on some currency pairs. So looking at the US yields here, I have also the correlation between dollar and the S&P 500. This is the old chart, by the way, just updated version. And we have seen this 5th wave to the upside. At the same time, if the US yields are really headed down for a correction, dollar index obviously could also stay weak. So I would not be even surprised if we see at the first part of 2024 hitting or dollar index going back towards 100 while we are seeing US yields in a corrective phase. Of course, I would be looking for stocks in the S&P 500. I think that we could revisit these all-time highs as well. And since I mentioned stocks, of course, it's a long-term consolidation here, maybe still going on. So watch this trend line resistance here, connected from all-time highs, maybe not easy to break out here. But whenever if we get some kind of a pullback, I think that this could be an interesting opportunities on the way up. Now, current lag here is definitely a bit strong and maybe overextended. So I think that if we get some kind of a pullback, this would be very healthy, maybe for new potential longs, especially if the US yields obviously would come to the upside.
The way you have that drawn out, I mean, and I'm just kind of thinking this through. Maybe it would take us maybe a little bit of a pullback in the month of December. Remember, we're going to be getting holiday retail sales data over the course and reports over the course of the next few days here in the US. And, a lot of people celebrate Black Friday and, Cyber Monday and all that other stuff. Maybe that's a catalyst to maybe allow the markets to stabilize a little bit or pull back before a new rally into the new year.
Yeah, so for Christmas early, but not really sure if we can get the same magnitude here to the upside like we have seen now in the last few weeks. It's a pretty strong, a bit overextended move. So I just think that, yes, this pullback could certainly maybe show up here in the first part of December, let's say. Now, earlier you talked about gold. I just think that gold is really breaking out. I think that maybe now we just have to be prepared on something more complex here regarding the correction. I'm comparing this corrective phase that was in place through summer to the current stage. So I think that maybe it's a little bit risky to buy or look for any short-term setups on the long side. I just think it would be much better place to look for potential longs if we see a drop back towards 1930 and 1900. I think that would be a pretty solid level for potential, maybe even head and shoulders pattern here, who knows. But then certainly I'm bullish on gold and will be expecting more upside, all in the context of weak dollar, of course. So I think that there can be still opportunities on gold, but not right here. I just think that maybe if you are bullish, you want to wait on a better levels. Also, maybe we can bring on silver as well. Now, silver here, maybe it's still trapped in a longer term consolidation. The trend line resistance, that it's a very important one, comes in around 25. So after some pullbacks, maybe that's the level that we could look for. But eventually, I'm not really expecting any major breakout. Maybe we'll have to wait till first part of 2024 when I really think that dollar weakness could potentially resume towards much lower levels. And since I mentioned dollar index, here's maybe the short-term play that I'm looking at. So a few days back, we stabilized here, probably because of this Thanksgiving holidays when flows changes. And now I'm tracking this corrective stage. So the 38.2%, which is ideal for a wave 4, comes in at this previous minor consolidation. So 104.40, 104.50, that's the perfect area for the next sell-on. And I will have plenty of especially commodity currencies versus the US dollar as well for potential longs. I think that Kiwi, Aussie, all of them are looking pretty solid, especially since Chinese yuan have made a pretty impressive move this week.
Yeah, I mean they are like the Aussie, the Kiwi, but they're all struggling as we approach that 200 DMA. But that
After
doesn't,
pullbacks, yeah.
Yeah, after they pull back, I mean, they have been stabilizing. Real quick, can you show us copper, because the Aussies kind of stopped with copper. Copper hit the 200-day moving average. I don't know if you have copper up there. Yeah, there you go.
I'm not sure if I have the wave count on it.
Looks like, yeah, but it's kind of stalling with the Aussie. That's why I was just curious to see. Hey, can you do us a favor, since we don't have K-Man here? How about the dollar yen? Because the dollar yen, we've had a big rejection around the 150.
You have wrong man for dollar yen. You definitely should have Cayman on board.
Yeah, he is. It looks like he might be out today, which makes sense. But yeah,
I mean, dollar yen here. I believe there was not intervention right back here on October. It was just some speculation.
It was a rate check, so they say.
Yeah. So we just touched these levels, and we are seeing the pretty significant bounce. And as I said earlier, regarding the short-term wave structure, if US yields are really going to see this ABC rise, which by the way is expected because this was a pretty nice sell-off, and definitely US yields will not move to the downside in straight line. So if US yields could pull higher here, then I would assume the dollar yen could actually retest those highs here. So this is a very strong resistance for sure, but we haven't cleared it out yet. So I think the market is just waiting this level to be maybe cleared. Then I'm not sure how Bank of Japan will look at these rates then, and what would be speculation, but definitely they are maybe looking and expecting that lower US yields will impact and drive dollar yen to the downside. So maybe some interventions are off the table, even if we see some more upside. But overall, I think that 152 is 154 in that area is a very strong resistance for dollar yen. So awesome. I would be expecting limited upside as we approach maybe December or later in December.
It was a bit of a surprise that we didn't see a yen move on the CPI last night, because it was up again. All the numbers bar one of the cores was higher, and the core that did drop is still at 4%, and that puts them, I think, a year or over a year above this 2% target now. So the pressure is going to be on going into next year if we get all these wage hikes on top. They said that the inflation was going to fall back in the second half of the year. It hasn't. So they're going to be under pressure.
So it will be interesting if they can get away with without any more intervention at this point, right? I mean, I think it's going to be an interesting one. Hey, Grega, thank you so much for your updates with Elliott Waves in the markets. I appreciate it. And just remember, guys, gals, you can access his work. He updates his work every day on all 30 instruments on ForexAnalytix throughout the course of the week. So throughout every day actually. So I'm going to pull up the data flash. We do have Canadian data coming out. We have Canadian retail sales. So we'll just keep an eye on it here. I'll just put it over here. You can see a 1 minute chart of the dollar CAD. And then after that, we're going to talk a little bit before we let you guys go for the weekend. we're going to talk a little bit about the PMI data that's coming up. So here we got just about 5 seconds. Dollar CAD's flirting with that 50 DMA, just in case you guys aren't looking at it. Wow, strong data.
Stronger.
Look at that. Retail sales. Boom.
Boom.
We're going to flush right through the 50 DMA here. You can see there's the 50 DMA. Big support coming in around 136.50. What do you think, Ryan?
Yeah, pretty strong. We were talking about this one as a potential trade to look at today. Watch those levels at 136.50. Pretty strong level. So if we can't get through that, then well, we're not even getting close to testing it at the moment. But if you can't get through that, that might be a little bit of a stretch point. If someone wants an intraday trade, I'm going to be looking at that myself. But,
and if you take this ascending channel support, you want to talk about how important that level is. Oops, let me move this over just a hair. You can see that support's going to be right in that there's a 50, 30 channel supports coming in. Remember, this is a longer term channel right here. You can see it through the daily charts. And it might actually be drawn more like that, actually, or maybe even more like that. Technical analysis. I was explaining to my teenage son who's currently trading DraftKings right now. I was like technical analysis. I tell him exactly the same thing as I tell you guys. It's not an exact science. It's if it was, life would be so much easier. We'd all be gazillionaires, but it's not. So we have really big support around these areas. Ryan, Stelios, and also Grega, we have I'm gonna just a couple minutes. Any last minute comments before the PMIs come out here in the US?
Maybe you should also, since you talked about dollar CAD, maybe it's worth to mention crude oil. We haven't talked about crude oil.
It's holding. We have a little inverted head and shoulder pattern, but yeah.
I mean, and for Fridays are historically quite good for crude oils. And sellers got rejected quite big twice. It was also some interesting volumes at the end of the move here in Thursday, November 16, and also this Wednesday, where we got this sell-off and then sharp recovery. So I think it can be a pretty strong move towards $80 if we can stay strong today.
Yeah, look, this, whether it's a triangle consolidation, which tends to be, a continuation, or we are getting some sort of reversal here. If we can break back above that previous support, which comes in around 77 and $78, I guess. Yeah, maybe we get a little bit of a squeeze, and that just gives you that continued Canadian strength. Also, I guess I should mention this: the EuroCAD really is struggling around that 127% extension earlier this week, and we're starting to see some resistance there. It's a big resistance for this pair on a weekly basis. You can see it just like that. Ryan, you have any other comments for us?
No, just keep an eye on this data. Obviously, the US is on half day today, so things are going to die pretty much a fast death after the PMI data. Just got to roll with the punches, really. Services is expected to pull back a tiny bit, but stay above the 50 mark. Manufacturing is expected to dip under the 50 mark. We'll go with services as the leading number.
That's the big one, right? Let's imagine the services PMI comes in sub 50. Dollar's going to get hammered today in low liquidity.
Yeah, exactly. Yeah, that might just give you some of your levels if you want to dip in the dollar. It might just give you some of your levels that you might not get otherwise. So that's one thing about low liquidity to look forward to.
Two last things I'm going to cover really fast for the folks. Stelios, are you here? Did you have any comments before we?
Not really. I just want to echo what you said. Usually on these PMI numbers, a few tenths here and there don't make a difference, but we're so close to that 50 level, which is a psychological thing, right? Contraction versus expansion. So I would say there is a risk that we come in a little bit lower than expected, and the market kind of overreacts because it's prints below 50. If it was at 55, it doesn't matter if it's 55 and a half or 55, but here it makes a huge difference.
It does.
Psychological aspect.
It's our services data, and we are a services
service
economy.
economy.
Yeah, I mean, I think a lot of Western countries seem to be services economies as a whole, right? By the way, crude oil is getting smacked right now. Just FYI.
I'd like to add as well, keep an eye on the Adobe reporting, because they're pretty quick nowadays with the reporting over the Black Friday sales, online sales.
Yeah.
So if you get something like that over the weekend, if they're very strong, could possibly mean a bit of gap movement on Monday.
Yeah, that's and I mean everybody's going to be monitoring Black Friday sales, especially, this isn't like last year was the first year that consumers were dealing with this inflation shock. And don't forget, American consumers had a nice chunk of change in their savings. They could bear a little bit of a brunt of the higher prices and still be merry and cheerful as we go through the holidays. Now you fast forward us a year. Inflation is still, I mean, you have to imagine consumers' mindset. And I try to explain this phenomenon to most people that don't understand, like the average consumer, they see prices go up and they go, oh, prices of this went from $2 to $3. So, as inflation comes down, everything should drop back to $2 or $2.25. And that's just not the case. That's deflation. We don't typically get deflation, so prices that are high are staying high, and it's starting to bite. It's going to start to bite consumers as they wrap their minds around the fact that prices aren't really coming down. Although they're not going up like they did, they're not they're just not coming down. So, do their purses tighten up a little bit through the holiday season? That's going to be watched very, very carefully, Ryan, and I think you bring up a really good point there. We did get a couple of Stelios, I'm sorry, you were continuing on. I didn't want to interrupt you.
I didn't say anything.
Okay.
I was done. Yeah, carry on.
Okay.
Metal's
real
doing
quick,
well, by the way.
I'm sorry.
Metal's doing well. Silver attacking 24 right now.
Silver's moving up on that I don't know why, but they're moving up ahead of the PMIs. Hey, real quick, I did want to cover the Aussie because Mike asked about the Aussie, and we're going to look at the pound Canadian. So the Aussie's right up against the 200 DMA, 50% retracement, previous support. Also keep in mind, as I mentioned a little bit earlier, copper is right, nailing the 200-day, but also struggling. So it's hard for me to be chasing the Aussie higher when you can clearly see copper really nudged up against some pretty key resistance here. 200 DMA underside of this trend line. So I would say that while the Aussie trades below 66 cents, you just have to be a little bit more careful with it. We also had a question about the pound Canadian from Horacio. So let's go to pound Canadian really quick. And I hadn't looked at this one in a while. So, but you can see we're right up against, looks like against trendline resistance. Well, that's your do or die level, I would say, right? If you want to stay bullish, sterling, we break above that level and then you're bullish. But, while you're below it, and you see the dollar CAD slipping, maybe this is maybe it's a better, short up here with stops right above the highs, maybe above today's highs, maybe above the, I don't know, what is that, 173, 172, maybe 172 and change. Any thoughts on that, guys?
No, I think you've got that spot on. Where your pain is.
All right. Yep. That's it. You know where your level is. Well, I know we were a day without Dale. See how that rhymed like that? Day without Dale, but don't worry, he'll be back on Monday. I want to thank everybody for joining us today on the F.A.C.E show. I once again, if you were celebrating Thanksgiving, hope you had a great time with your family and friends. Made a lot of lifelong memories there. And for those of you that were not celebrating Thanksgiving, hope you just enjoyed kind of a day of peace and quiet, or at least semi-quiet. But we'll be back on Monday on the F.A.C.E show. So guys, gals, I hope you all have a great one. Stelios, Steve is listening in the background. Ryan, Grega, thank you guys for joining us today, and appreciate your inputs.
Thank you, everybody. Thank you, Blake.
Have a nice
All right,
evening.
and for those of you on the ForexAnalytix, in the family, we'll see you guys on the morning edge in about 35 minutes. So I'll see you guys there. Thanks, everybody.